Hello, guys. So today I want to talk to you about technical analysis, options, and fundamentals. All right. So here we have Apple. We understand that fundamentally this company is well structured, right? We have no doubt on that one. However, you could be buying Apple at a high point, $135 3 weeks ago, and it went down all the way to even $123, right? So right here, Apple, this is a price behavior which is represented with candles. Red candles means there were more sellers than buyers, and green candles there were more buyers. So at this point, you look at Apple and you're like, okay. However, if you understand technical analysis, okay, it gives you the knowledge to actually start understanding that Apple, it is actually going in something called a pattern called ascending triangle. Okay, you will say like, okay, what is an ascending triangle? So if you actually take a look in here, okay, and you come up here to Google and you find ascending triangle pattern, right here, you can see that and go to images, it will give you an idea of how they look, right? So if you actually take a look at it and you see Apple, it is doing that, right? So this is it's a bullish pattern that it has a high probability that actually it can go back up to $135, maybe come back down a little bit more, and then eventually actually breaking out from this formation, going to a higher stock price. Or actually, if it comes back down here and you start seeing that this stock price actually starts trading at 120, then actually it's breaking down and it's coming down. And however, Apple is a good company. Unless there is a bad news, you could see that happening, right? To actually start going downhill. Um, and we're not expecting anything from that from Apple as of right now. So, anyways, so this is technical analysis, right? And at this point, it tells you kind of points where to buy and sell shares, right? Understanding this type of patterns, and also you have indicators. Then, when you actually load indicators into it, now you're going to start seeing this is the line that I drew, but you're going to start seeing that there were some points where the stock price came down to $108 and then it pushed back up. But the reason why that happened is because there was some support, such as this one, certain points that it actually made that ascending triangle to be drawn, right? Without indicators, you will not know what they are, right? So let me go ahead and remove it as of right now. All right, and this is what you currently have. Now, when you buy Apple, let's say you wanna buy Apple, and look how much it costs. It costs you $125.43. All right. So when you do that and you add that into math, right? You are like, okay, $125.43. If I want to buy 100 shares, I need to have $12,543 if I want to buy shares, right? Now, what am I actually expecting from Apple? So we talked about that an ascending triangle. Actually, what it does is that touches certain points, it goes back up, and it touches a certain point, and it goes back up. We're like kind of right here, right on this point right here. So most likely has a good chance that it will go to a 135 throughout time. It may take a week, 2 weeks, maybe it could take 2 months, right, to get back up in there, just the way it happened here, right? Look at this. This is the timing. All right. And if you want to do that, so technically, if it actually does bounce back, you have the possibility of making about $10 per share, right? So you're like, okay, so I feel that the stock price, it could go up to $135 if I buy it, let's say Monday. Right now is Sunday. So you have a possibility of throughout time make $957. Okay. But you're like, okay, with this being said, um, uh, $12,543 you had to invest. So if you had a capital of $40,000, that means that all you had left, it was $27,000 and 457 in order for you to be able to invest in something else. What if you only had $30,000 available? Okay. So all you had left is $17,000. What if you only had $15,000 available? That means that all you had left was $2,457. So your investment is big compared to your return. Okay, so what is your return in reality? Okay, so you are really actually your profit is 957 divided by 12,543. I mean, you're making a fraction of a return. You're not even getting 100%. You're not getting 50%. You're like getting probably maybe 10% out of it. And you're like, okay, not bad either, right? But at this point, you're investing so much to get so little, right? What if Apple actually goes back down to this support to $123? Okay, so what if that happens, right? You come over here and you put $123. That means that you lost in a day. Let's say that happens on Monday. You lost in a day $243 by buying Apple on Friday. Okay, let's say that's when you bought it. So is there an alternative for this? Yes, there is. And here we have something called options. Okay, with options, depending on the expiration date, these are upper expiration dates. So you say, okay, you know what, I think Apple is going to go over it's going to actually go to I don't know, it's going to go up, but I think it's going to take like about 3 weeks to do so. 20 days, that's fine. So you go ahead and you buy a call. In this case, is $261. So you're like, okay, what does this mean? This means that you're paying $2.61 to buy 100 shares of Apple, which we're talking about is the same thing as this 100 shares that you would have bought directly. The difference between buying shares and buying options is that you're giving away $261, and hopefully it goes up. If it actually doesn't go up and it starts going down, you lose $261. Not bad. Okay. So let's say that you buy it. Okay. And at this point you buy it, the most you're going to lose, even if Apple goes all the way to $0, you're always going to lose $261. Okay. But now if Apple actually starts going up, okay, let's say if it actually does go to $135, you actually made $639 by expiration. So if it goes to 135 too, you get 645 days, $645. All right. So with this one, right, what is the premium that you are actually paying? We said it was $261. Okay, so we do that over here. So 2.61. Okay, so what is $2.61 is times 100 shares. It costed you $261 altogether. Right now, at this point, you have a profit of $696. It kind of is the same as this one that I told you here, right? 135. Yep, it says here 642. On mine, it says 696. It's somewhere along those lines, right? So it's close. So what's the benefit? First, the most you paid for the same 100 shares is $261. Okay, so going back to here to our capital, if you had a $50,000 capital, all you spent is $261, meaning you have $14,739 that you could use that money to invest in something else. How much do you make on on options, and how much profit do you make on shares? On shares, you could make all the way to $957. However, in options, all you could make was $696. That's just like about $200, or actually $261 difference, because you don't make the same profits as buying shares. Why? Because you're paying a premium upfront. So you deduct this from the profits and you get this amount. So you almost make the same amount. However, this one you spent $261. This one you spent $12,543. So if we're going to talk about returns, right? The returns, usually the way you calculate, you say, okay, $957 is my profit divided by my investment. So technically you're making like 7% return, right? How about here on options, right? 696 is your profits divided by $261. So how much return do you make? You made like about what is it, twice, almost 2.5 times your your investment, right? So at this point is what, 266%. So 7% compared to 166%, I think that's definitely a big plus. And you had all this much money that you could have bought some other stuff. And however, if you buy shares, all you have left is $2,457. So technically you're tied up. There is nothing else you could do because you gotta wait until actually Apple goes all the way up. So you're like your hands are crossed technically. Okay, so that's the difference. However, with options, you still have $14,739 that you could use it for and start trading other stocks. Meanwhile, you're waiting for this one to do almost the same thing that you would do as far as shares goes, and you still get almost the same premium. Okay, sorry, the same profits. Now, that's the plus side. What about if actually Apple goes all the way to $123 by Monday? What happens? You lost $243 in a day from Friday to Monday. What about with options? Okay, options, first of all, you have a contract that you bought it for June 20th or June, wherever we talked about, June 11th. So that's the day that you're going to lose your entire premium if it is not up by then, right? But if it in a day, okay, I'm going to go back here. If in a day actually go, from Friday to Monday, let's go ahead and put here Monday is the 24th, so I'm going to simulate it's Monday. Okay, so technically if it went down to $123, all I lost was in this case $108. Okay, so all I lost is $108. If it actually, let's say it's 525 and it's trading at 123, I lost 117, and so on and so forth. So which one do you lose more? This one you lost like $108. This one in a day you lost $243. Okay, and let's say that actually Apple goes to 120. This one you lost $543. With this one, if let's say it goes to 120, you actually lost $194. So this one you lost 543, and this one you lost 194, and so on. But the most you could lose is $261 by expiration date. So it needs to be trading at lower, lower by that day below your strike price. And what is your strike price? I said that it was $126. So it needs to be trading below that by June 11th in order for me to lose the entire premium. However, with shares, if it keeps going down, you're going to keep this number is going to be growing. Okay, so that's what options is. All right, so we have our Discord that you guys can join us, and here the people that are in green are the students that have taken my classes. If you're interested into options, technical analysis, fundamental analysis, let me know. Also, here I have my website, which is our Discord website. Is www.oditradingacademy.com, that you can come in and you can actually join. Okay, join our Discord, and you can actually see our students' testimonials and everything that we're doing. And here are the courses. If you want to do the accelerated courses, are here that you learn in 14 days or 19 days or 11 days. Okay, straight, if you want to learn all this quick, or you can do the bundle, and this is actually 12 weeks and you learn every single aspect. And why is it important for you to actually learn every single aspect? Is because first you need to learn technical analysis to understand at what point you're buying. Second, you need to learn options so that way you can see the most efficient way of investing your money wisely, okay, as I explained. And then you need to learn about, in this case we use Morningstar, okay, to learn about fundamentals. All right, and here you can learn the financial statements from the companies, and actually calculate the intrinsic value for the company, just to make sure that you're buying a company at its intrinsic value. For example, NIO, right? Here people were buying the NIO, right? And by that time, NIO wasn't really worth that much. And you see NIO now went back down. Maybe this is close to its intrinsic value, right? So those are the things that when you understand fundamentals, you understand that you don't want to catch a falling knife. You want to see if you're getting close to intrinsic value to get into the trade. So that's the reason why ODI Trading is offering this bundle course, because you actually learn all three aspects of it. And here I have Jackie, and you guys know her from the Genius page, and she's actually taking my bundle class that I'm offering along with other people that are not available today. But she can tell you her experience about here taking classes with me and the way I teach.
Yeah, so the class so far has been incredibly insightful, and I learned a lot. And probably the most eye-opening was that I invest far less money, but I gain a big return. And learning technical analysis as well helped a great deal because I know when to buy and when to sell. Whereas before, even when I tried trading options before, I didn't know what I was doing. And immediately after a first purchase, it would be like in the negative. So now I know how to do it the correct way, and it's really helpful. So, and it's I've learned a ton. So
Awesome.
it's been an amazing thing to learn about, and I'm grateful that I finally got to learn about it. And I wish I would have done it sooner. I definitely wish I would have done it sooner. And I most likely will be shifting to options instead of day trading, just because it's less money to invest, and I profit a lot more.
Yeah, for sure. And the thing is that understanding all three aspects in the stock market is the best way. So in that way, you understand why you're buying something. Okay, if you're buying at a good price because of the technical analysis, which strategy from options you could be implementing, because at this point, as you see, you pay $261 to actually get a call. However, there are many strategies out there that actually gets it cheaper. So for example, if you want to do a bull call spread because you think, for example, NEO is going to go all the way up to, let's say, $37, then you buy a call, you sell a call. At this point, instead of you paying that price, now all you're going to pay is $107, for example, right? So these are the benefits, all right, of you using these strategies. Is pretty amazing. And here, instead of you paying let's say let's go back over here. Let's go back. Where is it? Right here. We were at Apple. Sorry. Now we are at Neo. But let me go back to Apple. So we're back um, um, with the same example. So right here, let's say that Apple, you think that Apple is going to go all the way to $135, right? You come over here, and if you buy a call by itself, it's $261. So you pay. However, if you already know it's going to go all the way up to 135 and it's not going to go over that, then you buy a call and you sell a call. At that point, instead of you paying $261, all you're going to pay is $227, and you're in the trade. And what is the maximum that you could pay? You could pay in this case, I'm sorry, that you could make profit is $673. Okay, but capping your profits, you can't make it unlimited, but you already know that in this case, Apple already has a resistance. It has tried it a few times before, so you know there is a more chance that it will hit here and it may come back down. So at that point, why buy a call so expensive, right? When you know there is a resistance in there, and at this point you say, okay, now you save your money, right, by capping yourself, and you say, okay, it's $227 that I'm going to spend on this premium, and the most I'm going to make is $673, but the most I'm going to lose is 227. So based on our Excel sheet, so now you just maximize a little bit more your in this case your profits, right, your stay in that trade. So it's $730 instead of what it was before. So there's so many strategies out there. There is another one, right, that you can also do something called a butterfly if you think that you know a range of it. Okay, if you think that actually Apple could be trading in the next few days between, let's say, $128. Okay, it's going to be between $128 and $135. All right, at this point, if actually Apple does trade between that range, all you're paying is actually $36. Okay, okay, so let's go ahead and take a look in there. So now at that point, let me go ahead and do this. Okay, so right here you're risking this, and here is $36 and actually $136 what I have here based on this strategy. Let's see, actually let me go ahead and adjust it because it's not even, it needs to be even. So, or this one should be less than that. So let's say it's going to go all the way to 133. Okay, so now it's kind of close to it. All right, so at this point, you're gonna pay $55. That looks much better. And now the most you're gonna lose is $55. You could make all the way to 243, but if it actually goes above that price, and let's say it goes to 140, the most you're gonna make is $45. So these are the different type of strategies that you could learn with options, so you can maximize your returns. So again, if you're interested, let me know. Go to our website and you can contact us from here. You can also log in and be a member, and also come back here um, to our Discord and you can join before, and again, take a look and with other students and ask them. Also, you can see the student testimonials here of the people that have taken classes and finished them, and so on and so forth. So just let us know. All right. So hope to see you soon. Thank you.